Today we'll be talking about some investment strategies that I've learned from the president of a major public company. One of the perks of being a product manager is that every once in a while you get invited into one of those functions where you get to talk pretty candidly with a high-level manager who has decades of experience. And this is one of those opportunities where I can get an idea about their approach in life, in business, how they think, and there are three key takeaways that I learned from this particular experience, and I'd like to share with you now. So some time ago, the management team and I were invited to grab dinner with this president of a major public company, and just coincidentally, I ended up sitting next to him. At the time, it was kind of daunting, but I figured why not, how many times will this happen? So I ended up having a conversation with him about random things and important things. And, the conversation started off with just current events, Bay Area traffic, vacation plans. But I quickly pivoted that conversation toward something that I'm truly passionate about, right? I said to him, as a guy running a famous company, you've clearly accomplished a lot. I'd love to hear about how you spend your time and money at this level of success. He responded tersely, and I'm paraphrasing here, what money? Now, I could have interpreted that as a cue to drop the topic, but I figured I only have, so many chances to speak to the president of a company. I'm just going to push on. And I said, like how you spend your day when you have so much on the line and how you invest your hard-earned money. He ignored my comment about how he spends his day, but he did respond in a very interesting way about how he invests his money. So as the president of a public company, he spends a lot of time with the analytics team, doing competitive analysis, understanding mergers and acquisition potentials. And through those processes, he actually learns about how well another company is doing, and based on that he can figure out maybe what tangential industries he might want to invest in. There are two key takeaways. Number one is make big bets. You have to effectively make big bets so that you can increase the opportunity of you outclassing your current situation. Essentially, if you diversify your portfolio like you're supposed to, then you'll have a very safe and predictable portfolio. But of course, if your goal is to outclass yourself, right, reach that next level way faster than everyone else, the other key takeaway is to do your research. Research from reputable people or your own research on the companies, not just an idea thinking that's a great idea, I should invest in it, but also to truly understand what the company is doing and the next step that it's trying to take, right? Because that's what drives the value of that company. If you aren't doing these things, then you're just gambling. The benefit of investing in a US company is that at the worst case scenario, most likely that company is doing all they can to try to succeed as well. So not only are your research helping you, but you also have that additional padding of the company working for your money as well. So to riff off some of the ideas that he was talking about, I was giving an example of GoPro. I was investing in GoPro at the time because I thought the CEO was very charismatic and that a lot of people mistaken that GoPro is just a hardware company. In fact, they are actually doing a lot on the software front, and they're actually leading that as their differentiation. They also are going into the storage subscription business, which I know many companies have seen a lot of success in, right? And so that's why I was invested in GoPro, and I thought I shared that with him. Plus, I thought it might be a humble brag because I just made 40% off of my investment at that time. His question is, when do you think is the right time to sell? The third key takeaway here is always know when to sell. The reason is that when you buy a stock, you're basically saying that this stock has value and that value will be going up. But by how much? Because based on that delta, you're determining opportunity cost lost, saying that this stock and your money here is worth more to you, has a higher potential of gain than putting your money somewhere else in a different stock. And of course, you want to readjust and reevaluate that number consistently because the market changes, news gets announced, competitors do certain things, and you might have to pull out earlier based on whatever that criteria might be. Long story short, rather than making up a BS answer, I didn't know at that time, and I told him I didn't know. It got a little awkward, but I think it's a lesson well learned because based on that experience, I did a lot of research on figuring out how to come up with an exit strategy, and I sold GoPro before I tanked 50%. So thanks to him, I made some money off GoPro. So those are the 3 key takeaways that I wanted to share with you today. I hope you liked this video, and if you enjoyed the content, please hit like and subscribe.
If you want to get more tips and tricks about building personal wealth like this, please like.
So those are the 3 key takeaways that I wanted to share with you today. If you enjoyed this content, please hit like and subscribe so that you get more tips and tricks about wealth building, wealth management. I look forward to working with you in the next video.
Thank you.